Hi, welcome back to another edition of Lippers Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, August 29th, 2018. Investors actually took a sizable chunk of money out of the market, about $9.6 billion. That's going to turn out to be the majority, actually, was from money market funds, as we've been watching. But there really was a tale of two cities this week. We're going to see that with this $9.6 billion, had we included ETFs in the number, it would only been about $2 billion. So that means ETFs overall took out about $7 billion as a whole. So it was really a tale of two markets, and the reason is because I think first of all investors are a little bit fearful, and they heard reports about President Trump's lawyers and stuff pleading guilty to certain charges that have been brought up against them, and campaign violations and the like. And so I think investors were a little bit concerned on that side. But on the flip side, we saw 4 record days as far as returns go, and it was the last 4 days of the fund flows week, in which we saw the Nasdaq and S&P both actually hit record days each of the last 4 days of for the fund flows week. And basically it's just on a couple things. First of all, it's a continuation of a very strong Q2 earnings reporting season. But really what the exuberation was around was about the trade deal that was being struck. It's not completely done, but at least preliminary numbers are done between Mexico, and it certainly brought Canada to the table too. And so I think along with this, again, Q4 earnings season, Q2 earnings season actually being a very phenomenal earnings season. We also saw GDP growth in the second quarter rise to 4.2 from 4.1, so they adjusted those numbers again, and things are just starting to come together. And I think investors on the ETF side were able to move a little faster. ETF investors mutual fund investors ahead of the Labor Day weekend decided to kind of sit back and watch what was going on. So let's see how the news actually panned out into the flows into each of the groups. First of all, let's take a look at our macro groups. Equity mutual funds, again, lost about $3.9 billion. Was a pretty big number, but again, big number I think you see as bottom, $6.4 billion out of money market funds. But we take a look at taxable bond funds. They took in around $600 million in net new money, and then we see muni bond funds actually taking in a little bit of money, $155 million, but it was a positive nonetheless. So now let's go ahead and take a play-by-play for each of the macro groups. First, we'll start with our equity funds. Basically, they saw about a 1.59% return, very strong return for the week for the group. Again, I was telling you, it was a good market return, and so it's kind of a head-scratch. We saw money outflows in this group. Second consecutive week, they've seen plus-side returns, and for the 10th consecutive week, they've witnessed net redemptions, this time to the tune of about $3.9 billion. How that panned out, domestic equity funds saw about $3.1 billion in outflows, 15th consecutive week. They've seen outflows, but again, here we got the second or third consecutive week of plus side returns, 1.60, not bad for a 1 week return. And the non-domestic equity funds saw about $800 million in outflows. Second consecutive week, they've seen outflows, and it's the second consecutive week also they've said seen plus side returns, about 1.57% return on that. If we take a look at kind of the extreme cases, large cap you saw the lion's share of outflows has been a continuing story we've been talking about for quite some time. About $2.7 billion in international equity funds saw the lion's share of outflows on that domestic or non-domestic side, about $563 million in outflows. Well, now let's turn our attention to the ETF side of the business. And like I told you, it's been a tale of two cities in this group. Basically, for the 7th consecutive week, we saw inflows this time to the tune of $5.9 billion. Spider S&P 500, SPY ETF basically saw the largest inflows, only at $904 million. iShare Core S&P 500 saw about $616 million. And if we look at the very bottom of this group, we see the Spider Gold lost about $342 million. And then we saw that the Spider S&P Regional Banking ETF also saw net redemptions, only to the tune of $284 million. Well, that brings us to our fixed income universe. And taking a look at the fixed income universe, we've actually seen inflows for the 4th consecutive week, this time to the tune of about $586 million, and it's the second consecutive week they've had plus side returns. This week, 0.14% return. Now, the corporate investment grade debt fund group basically saw the largest inflows, about $1.6 billion, and then we saw international global funds taking about $218 million. At the bottom side of this group, they did take a little bit of risk off. Flexible portfolio funds saw the outflows, about $901 million, and we saw government mortgage funds lose about $138 $1 million. Not a lot to talk about there. Let's go ahead and take a look at the ETF arena, though, and see what happened for the ETF side of the fixed income universe. Basically, we saw inflows about $1.6 billion. Second consecutive week, they've taken in net new money, and at the top of the group was the iShares iBoxx High Yield Corporate Bond Fund ETF, took in about $381 million, and the iShares iBoxx dollar investment grade corporate ETF taking about $241 million. And then at the bottom of this group, we saw the Spider Bloomberg Barclay High Yield Bond ETF lose about $360 million. So certainly on both sides of the universe, whether it's ETF or the traditional mutual funds, we saw investors putting money to work back into bond funds, but again, tale of two cities between equity groups. Let's take a look at the Muni Bond Fund group now, and we noted that there was about $155 million net new money that came into that group. Second consecutive week, they've had net new money come in, and it's the first week in three, though, that they've had negative returns, this time to the tune of minus 0.07%. High yield muni bond funds took in the lion's share money, $219 million, and then we see the short municipal debt funds lost about $181 million, bringing out that net that net figure. We took a look also at ETFs, and they also saw a net inflows about $57 million this week for ETF muni bond funds. Now let's go ahead and turn our attention to the money market arena. And as I told you before, they saw redemptions, $6.4 billion of redemptions from that group. Second week in three that they've witnessed net redemptions. And how it broke out is taxable money market funds saw about $7.1 billion in net outflows, but tax-exempt money market funds saw about $744 million of net inflows. Now, if we take a look at the taxable money market group, we basically see that the institutional investors pulled out about $8.5 billion, while retail money market funds added about $1.4 billion to their coffers. Well, that really brings us to the end for this week. There's a lot of things going on. Basically, I told you we had really phenomenal returns. A lot of people attributed that to the, if you will, the end of the summer season, very low volume, good news. But one of the things that we're going to keep an eye on is as the workforce returns back to doing their normal things, kids getting back in school and people paying more attention to the markets. And traditionally, September has been a horrible month. February, August, and September have been horrible months for equity funds. We'll have to see how that pans through. Fortunately, we're going to be off for the next 3 days. Nice, long, extended Labor Day weekend. We hope you guys have a wonderful Labor Day weekend. And if you want to do a deeper dive, go check out our data at www.lipperusfundflows.com. If not, join us next week when one of our analysts will talk about the flows trends for the week. Thanks for joining me. My name's Tom Roseen. Wishing you the best in your wealth planning and creation.